We're back in business. Class is in session. Money printers, bro. We're back. I think we're probably back for like 3 days until I run out of video ideas. This video was actually requested by one of you guys. Risk management. Come here. Too many of you guys are blowing your accounts. I don't understand. I mean, there's a time to blow your account and there's a time to not blow your account. You guys are blowing your account during the times when you're not supposed to blow your account. Like, how do you even blow an account? Well, fortunately for you guys, I'm the best person to ask that question because I've blown so many accounts. Look at me. I am the professional account blower. So we're going to get into risk management. Oh, I don't know what that was. Bam. Look at that. Okay. Bam. Let's go into it. Obviously, we don't really need the charts for this, but I guess... yeah, we could showcase the charts. So there's a bunch of videos on risk management already. I'm sure you guys know. You go on YouTube, search up how to manage risk on Forex. Majority of people will tell you, oh, risk 1% of your account, risk 0.05% of your account, risk 0.025% of your account. Shoot, risk 0.01% of your account per trade. That's crazy. The actual way to do it is you risk 4% of your account each trade. Let me explain the mathematical probabilities if your average risk to reward is 1 to 1. See, if you take y equals mx plus b multiplied by the divider of XAU USD times the NASDAQ, you end up with the S&P. When you divide the S&P by the S&P, what do you get? Remember what they taught you in school. 0 times any multiple equals what? That multiple. Not 0, that multiple you multiplied it with. You're still following along? Good. That's exactly what we apply to our trading. So XAU USD times XAG USD equals what? Crude oil. Bingo. Now you're following along. So, class is in session. The DXY is moving. That was a joke. Market's closed. Okay, enough of the intro. Enough of the intro. We sat here. We wasted how much time have we wasted? 5 minutes and 6 seconds. Oh no. Oh no. Okay, let's actually get into risk management for you guys that are still here. So, going into managing risk, you guys need to sit there and develop a strategy of your own that allows you to be profitable within the market. That's the first thing, right? But in order to be profitable within the market, you have to know how to manage risk. If you're out here blowing 50 accounts, you're doing something wrong. And the first thing you need to realize is A, either one, your strategy sucks, or B, you don't know how to manage risk. Because a lot of the times, you guys will have good strategies, but you guys don't know how to manage risk. And or you guys know how to manage risk, but you just have horrible strategies. If your strategy sucks, fix it. But if your risk management sucks, that's why we're here. Typically let me tell you guys my approach to risk management. I risk around 2% per trade. Sometimes I'll de-risk, risk 1%. Sometimes I'll over-risk and risk 3%, sometimes even 4%. A lot of you guys, when looking at these funded accounts, right, these funded challenges, let's go. You guys know me. I've recorded this 4 times. And I got off track every single time. This is my 4th time recording it. Just this little segment though, not the actual video. Like, I go to record for 2 minutes, and I'd be like, I didn't even talk about risk management. And then like, I'd go back and then like, end the recording and then start it again. I'm like, this is a job. But anyway, let's go into the basics of rules on risk management, because too many of you are blowing your accounts, like I said. And there's a time to blow your account. There's a time where it's acceptable to blow your account, and there's a time to where it's, not acceptable to blow your account. You guys are blowing your accounts during the times where it's not acceptable. We want to change that. The times where it is acceptable, yes sir. Full port. That's not financial advice. Don't sue me. Don't. Anyway, getting into it, the typical rule with risk management, and you will find this probably majority all around the forex like space or even day trading space. Risk 0.5 to 3% of your account per trade. You want to stay within this rule. Per trade, per day, if you're trading daily. Typically, I wouldn't advise people to trade daily unless, your setup does appear every single day. If it appears every single day, execute on it. But for the people that only, let's say you trade 3 times out of the week, typical rule, risk 0.5 to 3% per trade. What I need you guys to do first is look at your trading strategy. See and look, when do I trade? What are my issues within my trading right now that are holding me back from making more profit? Let's look at profit, for example. Don't get sucked into the profit hole, but let's look at it. It's one thing to look at your technical analysis, your risk, but you need to look at your profit as well. Are you, your risk to reward determines whether you will be profitable or not. Correct. And what determines whether you're profitable or not? The numbers, baby, the numbers. Oh, the numbers. So the numbers, right? You need this number amount to be a good number amount. You don't want a bad number amount. You don't want to be making $5 a trade, right? No, we're not trading for $5. If we wanted $5, we wouldn't even go work at fast food, because fast food doesn't even pay $5 an hour. Fast food's not even that disrespectful. Do you know how disrespectful Air One is here in LA? I was with a homie, and he told me he had to pay $6 for a single strip of bacon. $6 for bacon? A single strip, like one strip of bacon that's like this big. He told me he paid $20 for a shake that was this big. That's not even the size of my head. That's not even the size of my hand. This is my chapstick. Anyway, actually getting into the risk management. We've been talking for way too long. Oh, these are all the files, by the way. Look how many times I messed up. 1, 2, 3, 4. I think. We're recording for 3 minutes. Okay. Actually getting into it. Let me think on how to say it in 5th grader terms. Because I'm a 5th grader. I'm actually a 4th grader. 3rd grader. I failed out of 3rd grade. That was a joke. Maybe I did. Probably. Anyway, in 5th grader terms, risk, don't blow your account. If you are losing, really, my messages are just gonna do that to me. Anyway, that's my mom's contact, Momski. Momski, yeah. And that's my homie, Chris. Anyway, you guys are involved in my personal life now. But with that being said, typical rule, 0.5 to 3% per trade. Average trader risk 1% per trade. Me, typically, I like to risk 2%. Why? Because more profit. But I need a notebook. I need something to write down. So with that being said, that doesn't mean if you risk 2%, you continue to risk 2% every single trade, even when you take a loss. No, there are times if you do get on a losing streak, let's say your average risk is 1%. Okay, cool. Risk 1% per trade. Continue to risk 1% if you're winning. Continue that cycle. But when you start getting on a continuous losing cycle, a losing streak, because that will happen to some of you guys, where you guys continue to take loss and loss and loss again, start to risk 0.5%. De-risk yourself, I will always say, by half of what you're risking currently. So let's say my risk is average 2%. I start to go on a losing streak. I'm going to risk 1%. I'm risking 1%. I start to go on a losing streak. I risk 0.5%. My typical rule is this. If you lose more than 5 trades back to back, you are doing something wrong and you need to stop trading on your account so you don't blow it. Some of my friends I talk to, they say 3 trades. Some of them say 10. I don't even know how that's possible. 10 trades in a row is crazy. How many times are you trading a day? But you get the gist, right? So with that being said, you have to go in and see what you're doing wrong. This is so important that you get off of your account, Because if you're off of your account, you can't blow the account. Let's start to use some common sense here, you see? But with average, with the average approach to the market, let's say you're not on a losing streak, typically I would recommend 1 to 2%. Why? Because let's say your average risk reward is a 1 to 2, is a 1 to 3. Your percentage gain on an account per trade is abnormal. Do you know how much a 6% gain on a $100,000 account is? That's $6,000, buddy. Let me double check. That's 6,000. That's 6,000. 6%. That's $6,000 in a single trade, right? You could live very comfortably off of that. In one trade, let's be real. And then you get your withdrawal in 2 weeks. What else are you gonna go do? Work at Chipotle? It's bulking season. I mean, you can. But with that being said, let me say it in simple terms. Figure out what you're comfortable risking. People overthink it. Don't overthink it. Figure out what you're comfortable risking. And once you've figured out what you're comfortable risking, if you start to go on a losing streak or take a continuous amount of losses that showcase you're doing something wrong, start to risk half of that. Let's actually show like an example with the prop firm. 7 minutes, of course. Lonnie just keeps rambling. The Funded Trader, one of my favorite prop firms, if not my favorite prop firm. There's also Skilled Funded Trading, FTMO, Funded Trading Plus, Funded Engineer, Traders. I mean, there's so many, but this is one, for example. Typically, they all have the same maximum drawdown loss rule, right? Let's say you risk 2% and you take a loss. Okay, cool. You took a loss. Your maximum drawdown rule is 10%. Now you have an 8% buffer, meaning if you continue to risk 2%, you will blow your account in 4 trades. Don't continue to risk 4%. 2%. Risk 1. Now, if you start to risk 1%, guess what? You have 8 trades until you blow your account. If you blow your account in 8 trades risking 1%, you deserve to blow your account. You deserve to get your account taken. You deserve to be my liquidity. Okay? Let's get that straight. So, it's so self-explanatory. Sometimes we all just have to sit there and start using our brains. Us as traders, we only use half of our brain. I highly doubt we use half. Because we sit there, we draw boxes on the screen, and then we click buy and sell. We don't do anything. But if you look at this from a mathematical standpoint, with y equals mx plus b, you could determine the counter trend of the end date, November 24th of the TFT Black Friday sale, will allow you to make sure you don't blow your account. But in all seriousness, my typical rule would be 2%, 1%, continue to take losses with 1%, 0.5. Let me actually break it down. 2%, ma'am. Typically, I'll allow myself a 4% buffer to risk 2%, so probably 2 trades. Once I get to around 5% of drawdown, I'll start to risk 1% for around 3 trades if I continue to take losses from the 3 trades, because then you'll probably be down around 6%. 7%. Wow, my math. 7%, risk 0.5. And then you have another 6 trade buffer until you blow your account. If you actually sit there and total it all up, you have a total of 11 trades till you blow your account. Something like that. Don't quote me on the math. You have around 11, 12 trades till you blow your account. If you blow your account 11, 12 trades, you suck. But now, let me tell you when it is okay to blow your account. If you are a trader that risks very high. I don't recommend it. This is what I do. I'm not recommending it to everyone. In order for how I get funded with all my accounts, how I'm gonna continue to get funded with all my accounts, My strategy is get funded quick or blow the account quick. I don't care. You know, I go out, I probably buy, let's say I buy like 10 100K challenges just cause. I'll go in, I'll risk 4 or 5% on a single trade, hit a 1 to 2, pass phase 1. Do the same thing with phase 2, pass phase 2. Right? Because I'm comfortable with that. I know I can do that. And sometimes, even on a live account, I'll go in on a single trade and I'll risk 3%, 4% sometimes. I haven't risked 4% recently, but, you know, let's say I do, then I'll go in and risk 4%. And if that's a loss, sure, then it's a 4% loss, right? And then from there, you can manage your risk and see your buffer. The main thing is you want to make sure that if you blow your account, it was not by you simply losing a million trades. And if you are losing, it's so difficult to say because you guys should not be blowing accounts. You guys really should not be blowing accounts. Like, why are you blowing accounts? Manage your risk. You don't know how to manage your risk? Risk 1% per trade. You take a loss, risk 0.5. Or risk 2% per trade. You take a loss, risk 1%. And then if you win on the 1%, go back to risking 2% or risk 1.5. Is it that difficult? I'm sorry, I love you guys, but sometimes I don't get it. And I don't get it either. That's why, like, I've known this from the beginning, and yet I've blown so many accounts. My gosh, I don't think. But as traders, we need to start to think, right? So with this, it also does take a lot of mental discipline in order to sit there and be like, okay, I'm not going to overtrade. I'm not going to over risk. Have a set limit for the day of how much you trade. Don't go in and take 40 positions in one day. Trade once per day. And if your rules apply, take 2 trades a day, right? But make sure if your total risk is 2% for the day, split it up, allocate it into 2 trades, meaning 1% on one trade, 1% on another. If it's 1%, 0.5, 0.5, right? Get your maximum risk for the day and then put it and split it or combine it or whatever with however many trades you take per day. That's simple. And then if you're able to control your peewee mind, you shouldn't have these issues of over trading. Just don't trade. You want to trade so bad? Okay, cool. Blow your account. Face the repercussions. Unless you want to be intelligent about it and sit there and start journaling and tracking your trades and seeing what you're doing wrong, why you're getting stopped out so much. But apart from that, that was our little tutorial on risk management and math. It was much more so math. Because really, trading is a mathematical game. Becoming profitable is a mathematical game. I don't care what nobody says. Yes, it's a game of technical analysis and fundamentals and charts. But if you actually look at it, it's math. If you're able to hit a consistent risk reward with a consistent win rate percentage, you will be profitable. Am I wrong? Am I wrong? That's it. And so stop overcomplicating it. I went on a ramble. But there you go. I hope you guys learned something from this on how to do math from a 5-year-old. Congratulations. Is that everything we have to say? That's everything we have to say. Join the Discord. And if you need help with risk management, you're blowing your accounts, we'll have a nice little talk in the Discord. You see? But yeah, follow this rule, 0.5 to 3% per trade. Or a day, depending how you trade. And stay within this boundary of being able to know when to de-risk. Right, until you're back in profit or whatever the case is. Apart from that, I love you guys. We've been recording for a very, very long time, talking about absolutely nothing. To be honest, I just sit here to ramble and talk and waste your guys' time because I love wasting my time too. So, I'll see you guys in the next video. That's full screen. Bam. Bam. Okay, I'll see you guys around. Hopefully. Next video is on bias. You guys need to learn bias. Next video is on bias. Oh my gosh. That's tomorrow. Get ready.